Welcome to Smart Stock Watch. Today is July 30th, 2025, and we're diving into Meta's second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Meta's performance this quarter.
Meta has reported some impressive numbers this quarter. Let's get into the details. Revenue and profitability overview. Let's start with the top line. Meta reported a revenue of $47.52 billion for Q2 2025, which is a 22% increase year over year. John, what are your thoughts on this growth?
Meta's revenue growth is quite remarkable, driven by a 22% increase in both reported and constant currency terms. This growth is largely attributed to the rise in ad impressions and the average price per ad, which increased by 11% and 9% respectively. The company's ability to expand its operating margin to 43% from 38% last year is also noteworthy, reflecting strong operational efficiency.
And what about profitability?
Net income surged by 36% to $18.34 billion, and the diluted EPS came in at $7.04, significantly beating the analysts' forecast of $5.83. This indicates Meta's robust financial health and effective cost management.
Operational efficiencies and future outlook. Meta's operational efficiencies seem to be paying off. Can you elaborate on their cost management and future outlook?
Absolutely. Meta's total costs and expenses rose by 12% to $27.07 billion, which is relatively modest compared to their revenue growth. Their capital expenditures were substantial at $17.01 billion, reflecting ongoing investments in infrastructure and AI capabilities. Despite these expenses, Meta generated a free cash flow of $8.55 billion, showcasing strong cash management.
What does the future hold for Meta?
Meta's guidance for Q3 2025 projects revenue between $47.5 and $50.5 billion. However, they anticipate a slower growth rate in Q4 due to a strong prior year comparison. The company is also preparing for increased expenses in 2026, driven by infrastructure and employee compensation.
Strategic initiatives and risks. Meta's strategic initiatives seem to be yielding results. Can you discuss their advertising performance and any potential risks?
Meta's advertising segment is thriving, with ad impressions up by 11% and the average price per ad increasing by 9% year over year. This is a testament to their effective ad strategy across platforms like Facebook, Instagram, and WhatsApp. However, regulatory challenges, particularly in the EU, pose risks. The European Commission's feedback on Meta's less personalized ads offering could impact their European revenue significantly.
How is Meta addressing these challenges?
Meta is actively engaging with regulators and has appealed the EC's decision. They're also investing in AI and infrastructure to enhance user and advertiser experiences, which should help mitigate some of these risks.
Key takeaways. In summary, Meta has delivered a strong performance in Q2 2025 with impressive revenue growth and profitability. Their strategic investments and operational efficiencies are paying off, although regulatory challenges remain a concern. John, any final thoughts?
Meta's results are indeed impressive, and their focus on AI and infrastructure positions them well for future growth. Investors should keep an eye on regulatory developments, but overall, Meta remains a strong player in the tech space.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Meta's performance in the comments below.